RMLO, there are quite a few RMLOs that have a Texas license. So if you are owner financing in Texas, you have a lot of people to choose from. There are a few that will do all the states, and there's a few that will do just certain states, because obviously there's a cost to getting your license in each state, and some of them just choose to wait until their product builds up enough before they do that. So the borrower is going to fill out a loan app just like you would if you bought a house. The loan originator is going to run a test to make sure they have the ability to repay. They're going to verify employment and income. That's actually pretty important, because someone can state that they're employed by, I've been a construction worker for, 12 years, blah, blah, blah. Unless someone verifies that, surprisingly, we've seen some RMLO documentation that doesn't have a verification of some of these things. And so you just, as the person that is that's going to be the originator on the note, you want to verify that the RMLO is actually doing that within they give you like a large report. If you haven't seen one, it's many, many pages long, but it's very good to go through and check that to make sure it's been verified. Obviously run credit if they have credit profile. Some of these ITIN buyers, as they're named, they either have a small credit profile or they have no credit at all. So sometimes you don't even see a credit score for them. They're going to provide loan estimates and closing disclosures. So that's really important to give the buyer, so they are prepared for the settlement statement. And they're obviously going to be an unbiased third-party underwriting. So an originator can actually get their own license and originate loans that way. But a lot of people just like to use the third party just because it's unbiased, and it's just another way for a vendor to be involved in your operation to where you don't have to worry about that step. I think a few of them will be around $700 to $800 to do what they call an ATR, an ability to repay test, and then a full origination usually, I believe, is in between. Let's say $1,200 to $2,000 per loan. I think is the range that I've seen with several different RMLO people. You don't want the buyer that's in a sinking ship, right? So if you look at their credit profile and everything sounded good when you were on the phone before you sent them to underwriting, but after underwriting, you look at their profile and you look at their situation and be like, oh yeah, it's a sinking ship. You don't want to have that person go through. It's just going to be a failure for both sides. They're going to fail at paying you at some point. They're going to get tripped up and not be able to afford to stay there. And then you're going to get stuck with a non-performing asset that you would prefer to have cash flowing. Or if you're trying to sell it to somebody else, you don't want to give somebody else something that's going to fail. That's supposed to be performing.